There are two types of changes that this budget has brought with regard to customs. One is, specific exemptions for certain sectors, which according to the government are high priority. These are sectors that have either been impacted by the tariff tantrums during the year that has gone by, and therefore they're adversely impacted. For example, footwear, for example, seafood products, leather, textiles. And there are specific exemptions that have been announced by way of either raw materials or some relaxation in the time limit which is allowed to these sectors to export finished products when they import raw materials free of duty. The value up to which they can import raw materials has also been enhanced. So these are measures that are meant to support sectors that are labor intensive and largely export driven, but which have been impacted because of the tariff uncertainty in the global order. The second type of exemptions are meant for what I would call, new age or futuristic industries, or industries that pertain to, climate change, for example, nuclear power. There again, exemptions have been given to specifically support those industries, either by way of cheaper import of capital goods or raw materials and parts, for example, in the case of aircraft manufacturing or part manufacturing, or even manufacture of components that are required for maintenance of aircraft in the industry. So the MRO, which is a service industry in India, and which is coming up, that has been provided support through this means. Some support has also been provided to SEZ units. The details, one will have to study to figure out exactly which sectors are impacted. But this is a limited exemption, which is time-bound, which has been given for SEZ units that have been allowed to sell their products in the domestic tariff area. Until now, the provision has been that these units are required to pay duties on such supplies or such sales as if these were fresh imports into the country. But some relief has been provided to them, for a fixed time frame. Then, of course, there are exemptions which have been given to life-saving drugs. That is the normal this thing. As technology advances, we come across new life-saving drugs. Exemptions are normally given in the budget. So this is one set of changes that has happened on the customs side. On the other aspect, where there are lots of changes, is with regard to process reforms and customs. And if you recall, FM had made a statement earlier in the year to say that her next priority after GST 2.0 would be to carry out reforms on the customs side. So a lot of reforms and changes have been announced on the customs side, basically to compress timeframes within which goods are cleared, to provide some additional relief to trusted importers under the Authorized Economic Operators Program, and warehousing provisions. There have been some relaxations also. So there are two types of changes in customs. So as you would know, the budget does not normally carry out changes pertaining to GST, because those have to be approved by the GST Council before those amendments can be carried out. But there are some decisions which were taken by the GST Council in its 56th meeting earlier, in 2025. And those changes required legislative amendments, which have been carried out through the finance bill this year. Two or three very, very major amendments that have been carried out. One is with regard to the place of supply for what are known as intermediaries. And the implication of that change is that these entities which are supplying services to, these could be back office services, these could be other support services, these entities located in India and providing services to entities that were abroad, and they were earning revenue in foreign exchange, they were being denied export status because, according to the place of supply provisions, the place of supply for such services was in India. That is being changed now, and the place of supply for such services will now be the location of the recipient. By virtue of that, these will be treated as export services, and they'll be entitled to refund of GST if they pay GST on the final services, or of input tax credit. So that is one major change. The other is with regard to post sale discounts, that are given through credit notes. Now, what has been provided, and this is again a follow-up on the decision taken by the GST Council, is that such discounts can be passed on through credit notes, and provided the recipient of such supplies reverses input tax credit, they will be allowed. Then there are some changes which are being carried out, which are meant to ease procedure for taxpayers and the GST. But the two major legislative amendments are these. Other than expedited refunds, provisional refund of 90% was promised to entities that operate under an inverted duty structure. So that need to be operationalized now, and an expedited registration process for small enterprises and fresh, entrance into the tax system. So those will also be operationalized through these amendments.